In our previous market update video, we were discussing the 20-week cycle trough, and we identified the FLD, which would confirm whether the 20-week cycle trough had formed in an instrument or whether it still lay ahead of us. The results are in, and interestingly, we have mixed results, with some instruments indicating that the 20-week cycle trough has indeed formed, and other instruments, yes, Bitcoin, I'm looking at you, showing that the 20-week cycle trough still lies ahead of us. So let's take a look at each one of our instruments and discuss what is happening. First of all, this is the S&P 500 using SPX data, and of course here is our important cycle trough which formed on the 7th of April in many markets around the world. You can see that this trough has been phased as a trough of 18-month magnitude. It is potentially an even greater magnitude cycle trough, and that big magnitude cycle trough of course explains the bullish market movement that we have seen since then. Now, in this analysis of the S&P 500, as you can see, we have a 20-week cycle trough, which has been identified as having formed in the last week of July. And in a moment, we're going to zoom in and understand why that has happened. This is one of the potential analyses that we were looking at in our previous market update video, which was recorded on the 11th of August. So in this position over here, at that time, we were asking ourselves, is this the 20-week cycle trough, or does it still lie ahead of us? Now, this analysis shows that the 20-week cycle trough has formed. In a moment, we're going to take a look at the Nasdaq, which interestingly presents a different argument and indicates that the 20-week cycle trough lies ahead of us. Is it possible that these two instruments could have 20-week cycle troughs occurring at slightly different times, in this case about a month apart? Yes, it is possible. We would usually expect, however, some commonality between the markets, particularly when comparing markets that are both a part of the US market. But let's have a look at the reasoning and see if we can make any sense of it. As I discussed in the previous market update video, this is the important cycle trough over here that formed on the first week of August, not actually the last week of July. That's the 1st of August. And here is where price crossed up above the 20-day cycle FLD. The previous market update video was recorded on this day over here. So at that point, we were looking at this evidence and discussing what could be happening. I presented an argument that suggested that this might only be a 40-day cycle trough that had formed on the 1st of August, in which case, of course, we would also expect price to cross above the FLD at that point, because price does cross above the 20-day FLD following a trough of 40-day magnitude. But the answer to this question would be provided, as I discussed in the previous update video, by the way in which price next interacted with the FLD. And this is what happened. As you can see, on Wednesday of last week, price came down to the 20-day FLD. It immediately bounced back up again, leaving the tail of the candlestick, or some people call it the shadow of the candlestick bar, reaching over that FLD. That would seem to indicate that this FLD was going to provide some support. If the FLD provides support at this time, then of course that would mean that this was the 20-week cycle trough. If, however, the FLD failed to provide support and price crossed down below the FLD, then that would indicate that this was only a trough of 40-day magnitude and the 20-week cycle trough lies ahead of us. Price action on Thursday was very muted. As you can see, we had an inside day where the entire price action was included within the range of the previous day. Then on Friday, linked to a news release, we had a sudden burst of volatility and price was brought back up above the level of the 20-day FLD. Price in early trading overnight, I'm recording this video before the US markets open, price has just dropped down below the FLD. Now, at this point, looking at this price action, we could argue that the FLD has effectively provided support to price because it came down to it, touched it on Wednesday. Thursday, we pretty much ignore as an inside day. On Friday, it managed to climb back up above it. And so at about the time that we were expecting this 20-day cycle trough, perhaps just a day or two later, we have a potential 20-day cycle trough forming over here, and price has found approximate support at the level of that FLD. However, when we look at our FLD labeling, we are able to rate the labeling of the interactions between price and the FLD. You can see that is a very low rating, a 30% rating. And so, although the evidence seems to point to the fact that the 20-week cycle trough has formed in the market, and Sentient Trader has positioned some diamonds there because it believes, after processing many different options for the phasing analysis of the cycles, it indicates that it believes there is enough evidence to position that 20-week cycle trough there. However, when we look at the Nasdaq, in a minute you will see a different side to the story. And because we still have other instruments, particularly, I'm going to mention you again, Bitcoin, because those instruments still indicate that the 20-week cycle trough lies ahead of us, I am taking this analysis with a pinch of salt. I am not yet prepared to accept that the 20-week cycle trough has formed in the S&P 500. If you wanted to be aggressive and you believe that the 20-week cycle trough has formed, you could certainly start entering some long trades if price exceeds the high as recorded over here in the second week of August. Then you could start building a long position. But I would like to see what happens with this 40-day cycle trough in this analysis, and also what happens in the Nasdaq and in other markets to see where that 20-week cycle trough really is. So let's take a look at the Nasdaq now. The Nasdaq is by default, I haven't influenced this analysis, it is presenting the other alternative in terms of the 20-week cycle trough lying ahead of us. According to this analysis, it should be happening soon, pretty much about the end of next week or so. But if we zoom in and compare the recent behavior, particularly to do with the interactions between price and the 20-day FLD, you can see why we are showing a different analysis in this chart. First of all, we have the 80-day cycle over here towards the end of June. Here we have the first 20-day cycle following that 80-day cycle, and as you can see, price found support at the level of the 20-day FLD, which is exactly what we expect at the time that the first 20-day cycle forms a trough following a trough of at least 80-day magnitude. Here is the 40-day cycle trough that we have been discussing, and you can see that price crossed down below the 20-day FLD, fairly accurately achieved the target that was generated as a result of that price cross, and then it crossed back up above it. Our previous market update video was recorded on this day over here on the 11th of August, and at that time I discussed the fact that the 20-day FLD would provide us with some useful confirmation as to whether the 20-week cycle trough had formed over here on the 1st of August or whether it still lay ahead of us. And the confirmation, as you can see, as provided by price interacting with this 20-day FLD, was exactly the opposite of what the S&P 500 did. Price crossed cleanly below the FLD. It did this as a matter of interest on Tuesday of last week. Having crossed cleanly below the FLD, it then came back up to the FLD on Friday and just managed to tap that FLD. If we display our labeling of these interactions, you can see now they have all been labeled with an A category interaction. There's our BC category interaction pair. Here is our D category and then our E category. And this, of course, was the F category interaction that occurred last week. Now, let me draw your attention to this rating over here. You probably can't see that, and I'm not going to bother to zoom in just to consider the rating, but that is a rating of 53.8%. It is much higher than the 30% rating we were seeing in the S&P 500. That is not absolute empirical evidence that this is the better analysis, but it would certainly mean that this is more likely the situation that is unfolding. And this is why I still believe that this is the analysis that is playing out not just in the Nasdaq, but also in the S&P 500 and probably all US markets and many markets around the world. In other words, the 20-week cycle trough still lies ahead of us. What would we expect next following the F category interaction? We would expect this 20-day FLD to provide resistance. In other words, we are not expecting to see price get above the level of this 20-day FLD until it has formed the 20-week cycle trough. If we zoom back out again and display the composite model line, which takes all of the information generated by the analysis that has been performed, and we display the composite model line, you can see the composite model line is indicating that we are expecting price to drop down into this 20-week cycle trough over here sometime perhaps next week. In search of commonality, we have been looking at the Australian market. This is the ASX, and here we have a big magnitude cycle trough, as we do in most of our stock market analyses, that formed on the 7th of April. That is a 40-month cycle trough. I've mentioned in previous market update videos that I use a slightly different nominal model for the Australian market. It is nevertheless a big magnitude cycle trough, and that certainly explains why we have had so much bullish price action. This analysis looks very good to me. Here is our 80-day cycle trough that formed over here in the 3rd week of June, matching the position pretty closely for the analysis in the Nasdaq. And here is our early August cycle trough. This is our 40-day cycle trough. As it is in the Nasdaq, it is also in the Australian market, positioned over there in early August. This means that the 20-week cycle trough lies ahead of us in the Australian market. However, I would like to point out that clearly the bullish pressure of these longer cycles in the Australian market are exerting a very strong influence. Identifying cycle trough positions can be difficult when you have a strong bullish underlying trend, because of the influence of those longer cycles that are pushing upwards so hard that the shorter cycles struggle to actually bring the market down into their cycle troughs. Therefore, performing an analysis gets very difficult because you don't have any cycle troughs apparent in the price action. And so, although this looks like a very good cycle analysis, we need to be a little careful. It does not provide nearly as convincing an argument as the Nasdaq does for the fact that the 20-week cycle trough still lies ahead of us. And notice this whisker for the 20-week cycle, which reaches over here all the way back into the last few days of July. Remember that the whisker tells us a reasonable range of time in which that particular cycle trough could form. And so the fact that that whisker is there does mean that we need to consider the possibility that the 20-week cycle trough has already formed, and it happened in early August. The composite model line that I am displaying shows, of course, a very strong upward price action. That is because clearly the price action has been very strong. You must remember that the composite model line is a little bit like a mathematical conjuring trick when you look at it in the past. It takes the price action and it takes the cycle analysis that has been performed. It breaks down that price action on the basis of that cycle analysis, calculating cycle wavelengths and amplitudes. It then recombines all of that information in what is effectively a mathematical conjuring trick. And it is no surprise that the composite model line in the past looks fairly close to what actually happened. It's a little bit like giving somebody a number, asking them to divide by something, multiply by something, subtract something, and so forth, and then, hey presto, you end up with the same number. So the composite model line needs to be treated with caution. It is not a magical line. It can best be understood and used as a way of visualizing on the chart what the analysis is telling us. In terms of what happened in the past, if the only thing influencing this price action was the cycle analysis, in terms of the future, we are assuming that these cycles will continue beating. And so you can see the composite model line shows a little bit of a dip into a 20-week cycle trough. Not a very big dip, because the 20-week cycle has clearly been overpowered by longer cycles, and then the market is going to keep going up. I would dare to suggest that Australians need not be terribly concerned about this 20-week cycle trough, because clearly their market is still in the grip of fairly strong bullish influences. If we zoom in and consider our interactions between price and the 20-day cycle FLD, you can see, or you might be able to see, that the rating of this sequence of interactions is 63.9%, a higher rating even than the Nasdaq. That's very good, and it indicates that we have a good, reliable sequence. A good, reliable sequence is a sign of a good analysis, but not necessarily absolute confirmation. Of course, our most recent interaction here was our E category interaction following the 4th of August cycle trough. and we would be expecting an F category interaction to occur next. Again, the FLD is going to be useful to determine whether price is indeed going to come down into the 20-week cycle trough or whether it has already formed. Although, interestingly, in this particular case, if it has already formed on the 4th of August and we measure the number of bars that have elapsed already, you can see that price should now already be falling into the 40-day cycle trough. And so if price crosses down below the 20-day cycle FLD, that does not negate the possibility that that 20-week cycle trough did already form on the 4th of August. The DAX has also been an interesting instrument to provide some commonality to help us understand what is happening in the markets. We have again our important 18-month cycle trough forming over here on the 7th of April. We have our 80-day cycle trough over here in the 3rd week of June. So far the DAX is matching what we have in the Nasdaq and in the Australian market very closely. Here you can see, according to this analysis, we have our 40-day cycle trough marked over here on the 1st of August, as we have it in the Nasdaq, and very close to that trough in the Australian market. Pay some attention for a moment to this bar count over here. 137 days have elapsed since the 7th of April trough. The average length of the 20-week cycle discovered by Hurst over 50 years ago was 136 days. And so we are right in the time frame for that 20-week cycle trough to form. But you can see that the DAX is also not really coming down into that 20-week cycle trough, raising the possibility that the 20-week cycle trough also formed in the DAX over here at the beginning of August. The DAX is providing the kind of situation that gives a cycle analyst headaches, and if we display the VTLs for the 40-day cycle, you can see that the DAX has entered into a wedge formation between the 40-day cycle upward and downward pointing VTLs. At this kind of time in these kinds of markets, I would recommend that, in fact, rather than worrying too much about the exact position of the 20-week cycle, we rather trade the wedge formation that is happening. A breakout to the upside would indicate that the 20-week cycle trough has formed. It might be possible that we will see a bit of a dip down, perhaps even a slight breach of the downside VTL before price does break up out of the 20-week cycle trough, or price might steam straight up at the moment. Either way, when that 40-day cycle VTL is broken, we will have confirmation that the 20-week cycle trough has formed. You will notice that we have a very good, very high rating for our sequence of interactions here. That is 66.7%. And so this is looking really good. However, we would need price to cross down below the 20-day FLD on its way to the 20-week cycle trough that is expected soon to complete this sequence. It is certainly possible that the 20-week cycle trough has formed in the DAX too, and so we need to stay on our toes for this market to start moving up. We have also been watching the Nifty in recent market updates, and it gives us another interesting comparison with other markets around the world. It tends to move with a slightly different rhythm because of different economic conditions between India and the US and Europe. Here too, in the Nifty, we have our very big magnitude cycle trough over here in early April. We have our 80-day cycle trough that came in just about a week earlier than it appeared to come in the other markets. And here too, we have a potential early 20-week cycle trough that has formed. Notice that the nest of lows for the 20-week cycle is still being displayed at the foot of the chart because Sentient Trader performing this analysis does not have enough concrete evidence that the 20-week cycle trough has actually formed. You should remember a very important rule of thumb when it comes to trading Hurst cycles, that diamonds are not your best friends. You are not focusing or waiting for those diamonds to form. You are focusing on these nests of lows. You never wait for a diamond to form. A diamond is only positioned on the chart once we have enough evidence that that trough has formed. What is more important is the nest of lows warning us when to expect that trough. And as discussed in the previous market update video, I believed it was possible that the Nifty was going to form the 20-week cycle trough early. early, and it certainly looks as if though that is what has happened. If we display the composite model line for the Nifty, you can see that the information contained in this analysis suggests too that the 20-week cycle trough has indeed formed, because the cycle pressure, as calculated by taking all of the cycle analysis information, is now indicating that it is pushing this market upwards. As a matter of interest, we usually watch the 20-day FLD in these videos because they provide a useful sort of a time scale for these videos. But here is the 20-week cycle FLD. And there we go. I'm also displaying the sequence of interactions as identified by the software. Here is the A category interaction where price crossed above the 20-week cycle FLD. When the 20-week cycle trough forms in the market, we would expect the 20-week cycle FLD to provide support to price. And you can see that that is pretty much exactly what happened here. We should really be looking at this 20-week cycle FLD on a weekly chart, but it's fairly clear even on the daily chart that price found approximate support at the level of the 20-week cycle FLD. These interactions have been labeled B and then C, and of course the next thing that happens is price bounces out of the 20-week cycle trough and moves upwards. Zooming in, we can see how the identification of interactions between price and the FLD can be used to enhance your analysis. I pointed out the fact that we are still looking for this 20-week cycle trough in terms of the nest of lows still being there on the chart. But if you have a look at this sequence of interactions, a complete sequence has been identified with this interaction over here categorized as an A category interaction. The rating of the sequence of interactions is fairly good at 55.6%. The fact that we have identified an A category interaction actually confirms from one perspective the fact that the 20-week cycle trough has formed in the market. Gold continues to move fairly sideways. I've mentioned this in previous market update videos. We are looking for a really big peak to form in gold. You can see that is phased as a peak of 12 years. It's a really big cycle peak. I've mentioned in previous market update videos that I am not convinced that this is in fact the 12-year cycle peak, because of the fact that cycle peaks in gold are usually sharp, isolated peaks. This is not an isolated peak, because we have had repeated attempts recently for price to get back up above that level. Here we still have our 20-week cycle peak floating above us, and as I've mentioned, I would not be surprised to see gold achieving a higher peak soon. Notice the displacement of this 20-week cycle circle. That's an indication of a fairly big change recently in the peak analysis. In other words, those wavelengths have been adjusting. That is often an indication that the analysis is not absolutely correct, and certainly I would not be surprised to see it changing. In the meantime, you can see the price has been trapped in a bit of a wedge formation. We have two interesting VTLs to watch here. This is the 40-day VTL, which, similar to the DAX, is providing us with a boundary at the top and below this recent wedge formation. We also have this 80-day cycle VTL, which is a more interesting VTL in my opinion. You can see that price came down but failed to actually cross below that VTL, and that might well have been the last little move in this particular wedge formation before price bounces upwards and tries to achieve a new peak. But there's no evidence of that yet, so I'm getting a little bit ahead of myself. Taking a look at the 20-day FLD, and this FLD, I should point out, is based on the trough analysis, and the identification of the interactions is based upon the trough analysis, not the peak analysis. There are, of course, two separate analyses. Here is our A category interaction, then here is our B category interaction, where normally we would expect price to find support at the level of the FLD. It clearly didn't. Price came down, however, and formed a 20-day cycle trough that was a fairly apparent trough last week, and it has now just crossed up above the 20-day FLD. The fact that price dropped below the 20-day FLD does not invalidate this sequence of interactions. It is merely a characteristic of what is happening in this market. In other words, it's trapped in a fairly narrow range. And as the power of the 40-day cycle and probably also the 80-day cycle has faded, the 20-day cycle has become more powerful, has developed greater amplitude, which is why at the moment what has been driving this cycle is the 20-day cycle. It's being given some room to express itself because the 40-day and 80-day cycles have developed some weakness as price has been stagnating in this wedge shape. We are looking for a continued move up over here for the next week or so, certainly. Whether that is going to get it above our boundary lines, our VTLs, as I pointed out now, is not known yet. We need to wait for that to happen to get any kind of confirmation. Of course, the next interaction we would expect would be for price to cross down below the 20-day FLD into the 40-day cycle trough, and so we might be range bound for more time yet. Bitcoin has been a real poster child for Hurst cycles and the FLD sequence of interactions. This is the 80-day cycle trough that formed in the third week of June. Here is our sequence of interactions. You can see them displayed on the chart. Here is our rating of this sequence of interactions. Not surprisingly, because it is a fairly perfect sequence of interactions, that has a very high rating, 69.2%. When I recorded the previous market update video on this day over here on the 11th of August, I went through this sequence of interactions, pointed out the probability that the 40-day cycle trough had formed over there. It has now been found in this analysis, making this an E category interaction as price crossed above the FLD. Notice the accuracy with which it achieved that target, generated very simply, of course, by measuring the distance from this trough to the level at which median price crossed the FLD and extending that upwards. You can do it visually fairly simply. That target was achieved very accurately, and the next interaction, as I mentioned in the previous market update video, was expected to be an F category interaction. Here we got a perfect F category interaction where price crossed cleanly below the 20-day FLD. Price has tried a bit of a bounce back up to the level of that FLD. It failed to even reach the FLD, and it is now heading down into the 20-week cycle trough, which in Bitcoin certainly still lies ahead of us. There is a very dangerous possibility that this might be the 20-week cycle trough that formed over here instead of the 40-day cycle trough, and that we are seeing asymmetrical price action developing. That's very bearish. I'm not even going to do any more than basically mention it for now. If it bears further mentioning, then we will revisit that idea later. Here is the composite model line. Notice that the composite model line expected this second peak of the 80-day cycle to be lower than this first peak over here. It wasn't lower. Bitcoin gave us a bit of a burst up and then an immediate retrace downwards. This is the kind of trading opportunity that David Weiss used to speak about on his work, which developed on Wyckoff's original work. He wrote a very interesting book called Trades About to Happen, and this kind of price action is exactly the kind of thing that he described when a market is about to turn, and was most likely a little bit of fundamental interaction rather than pure cycle activity. And so even though we have a higher peak for the second peak of this cycle, I wouldn't put too much emphasis on that. You can see that our composite model line is expressing a move downwards into this 20-week cycle trough, after which, of course, price is expected to bounce up again. The extent to which price bounces back up again will be established once we are able to identify that cycle trough as having formed in the market. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below this video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.